Imagine this. The world goes on a lockdown due to a wildly contagious sickness. Schools and universities move to online curriculum. Businesses are shut down, professional sports are either canceled or postponed. Restaurants are closed, stocks are selling off quickly, groups and gatherings are restricted to no more than 3 people, or people that live in the same house. People who are considered essential workers can go to work, but anyone else has to stay home as long as possible. Unemployment reaches unimaginable highs, and with the unemployed being locked down, what are they supposed to do to pass the time by? Sign up for a Netflix subscription, of course, and that is exactly what happened. Netflix had an increase of 16 million new subscriptions during the lockdown, and we're about to get into it. Welcome back, everybody. My name is Sean Lucas. I just want to start off by saying that this video is going to be a company analysis, a stock analysis, a product analysis of Netflix, but also a future of projections of what Netflix could be in the near future if something significant happened. Also, if you guys are new here, I just want to say welcome. We've had a major influx, well, major relative to the size of my channel, of new subscribers, whether they're real or bots. I appreciate it all the same, so I just want to take some time to say thank you. And to get you guys up to speed, usually in these videos I do a little background on the company itself, where it came from, where it is now, and a little background on the CEOs. Then I go ahead and look at that company on a chart, and then we look up some major news or headlines or anything that's relevant to the company right now. And then I go ahead and tell you guys whether I think that company, or in our case Netflix, is a buy in my eyes. So without further ado, let's get into it. Now, moving into the background of Netflix, Netflix began all the way back in 1997, which I didn't know until the making of this video, and it's crazy to think that Netflix is a whole year older than me. Netflix was founded by 2 people, Mark Randolph and Reed Hastings, in Scotts Valley, California. But we're going to be touching on their background in just a little bit. The way the original business worked is sort of similar to the way it works now. You went online, you picked out which movie you wanted to watch, and then you waited. And waited for 2 days. Or at most 3 business days. Yes, the movie rental company delivered its movies through snail mail, something that a lot of kids today barely know exists. Once you were done with the movie, you put the movie back into, the DVD slot and into the envelope that Netflix provided to you once they delivered it to you, and then you send it back through the mail. Also in 2004, movie rentals cost around $11.99 per month with no late fees. Because there's a lot of mishaps that can happen with snail mail. And comparing that today, in 2020, a family plan costs around $15.99 per month for 4 users. But back to 2004, they had just reached the 4 million subscriber threshold, which is huge for them and honestly any other online company at that time. And as you can see from these 2 charts, they show how Netflix has grown exponentially over the years. To where we are at today, as of April 2020, Netflix has roughly 182.8 million subscriptions worldwide. But jumping into a little bit more background around these 2, Mark had done a bunch beforehand. His first job out of college was at Cherry Lane Music, where he learned different marketing strategies and techniques. Then he moved on to the mail order firms Mac Warehouse and Micro Warehouse with Peter Godfrey and his partners about a year later. It is said that this is when he made the connection between overnight delivery and customer retention rate. Sound familiar? Years down the road, Mark was acquired by Reed to help in a 9-person startup on a debugging company called Pure Atria. As for Reed studied mathematics at Bowdoin College. He then got his master's in computer science at Stanford University in 1988. His first job out of college or university was a debugging software company called Adaptive Technology. After leaving Adaptive Tech, he founded his own company and called it Pure Software, and he then became the CEO. During this time as CEO, he said he was unable to keep up with the rapid growth of the company or keep track of things happening. He asked the board to replace him, but the board refused, and Reed says, "This is when I learned to become a businessman." That company eventually went public and then merged with Atria Software, and then that's when we get Pure Atria. So as you can see, these 2 really aren't beginners in the entrepreneur field or business field at all. They actually have a lot of background, you know. Now, they have both had previous successes, and they both used their past experiences to build the perfect storm, if you will, on their combined project. And for the most part, I'd say it's worked out pretty well. So now that we have a little background on the company and the founders and CEOs, it's time to start looking at the company on a chart. So I wanted to start by looking at a 3-year, 1-day chart, but a little bit in the past because I wanted to show you when I was looking at Netflix for a potential swing trade. Now, all of last year I worked on swing trading like it was a religion. Now, as you can see from these lines that I made here, I was looking at 2 downward wedges. Not usually a pattern I would trade, but I was right on the first one, and I actually made some money. Not much because I didn't have a lot of capital at the time. But yeah, I did make some money. But as you can see, there was a second downward wedge that came around, and I knew exactly where I could hop in, but I decided not to because it just looked like the price range at 362-ish or 361, where it looked like to be a tough resistance to break right around that range. Well, I'll be the first to tell you guys that I was wrong, and that is part of the reason why I stopped swing trading altogether. And as you can see here, when I start scrolling to the future, the stock topped out at 575.37. Yeah. And that 362 price I was talking about before is actually now the price control, and it should start acting like some sort of support. Also, if we look at a 1-year, 1-day chart, we can get a better idea of what happened during March and April. So zooming in here, let's take a deeper look. You can see when, March started happening, and that's basically when cases started growing and lockdowns began, and people in the US really started taking the illness seriously. It's at its lowest point here, and that's right around 289. So from the beginning of the illness to 289, it dropped roughly 24%. But as you can see here, this red line right here, this is that price control I was telling you guys about in my last video. And what do you see? It bounced right off the price control. Other things you can see from this chart is the MACD indicator. The MACD indicator is kind of showing the signs that where it's at right now is being a little overextended, which means it's bound to come down at least a little bit in the near future. That's what I would expect it to do. And judging by the volume profile, which is this on the right, there's another volume pocket being formed right here from spending so much time right here, but the one I am talking about right now is this one. So if the stock was to fall back down and break this support right here at around 413-ish, I would expect the price of this stock to fall back into the 391 to 375 range, somewhere around there, and that's in this area. So I would expect it to fall there, and that's only if it was to break this support. Obviously, you could hit this support and go even further, and that's what we all want, because at the end of the day, everybody wants to be a bull and everybody wants to make money, so it's a win-win. And something else that you can see from the TOS is this little indicator right here, which shows you quarterly announcements and earnings, and right here we can check earnings. Estimate was 184 and actual was 159. So they missed earnings by a little bit. What was last earnings? Earnings last quarter was 161, estimate, and actual is 157. So I wonder what their deal is. I wonder why they keep missing, unless I'm reading that wrong. When I was originally writing the script out for this video, earnings had not been released, so I was assuming that the earnings was going to be good, considering how many new subscriptions they had during the quarantine, which was 16 million new subscriptions. But obviously, stock price and earnings are two completely different things. So, and you can see because stock price kept going up and they missed earnings. So, moving on. All right, so to start wrapping up things here and to actually answer the main question of the video, is Netflix a buy in my eyes? Well, you can tell from the background segment of this video that Netflix has really come a long way from 1997 to now in 2020. From the early beginnings of renting out movies to people of major studios to now producing their own movies and their own documentaries and their own shows, I'd say it's a huge achievement to say the least. And I mean, so many people know of Netflix. I'd say it's safe to say you could go around the world and say Netflix, and there'd be a lot of people that would know it. I mean, they even have their own catchphrase. Netflix and chill? I mean, you don't You don't say Hulu and chill. And my longtime buddy, one of my first friends here on YouTube, Jose Rojas, he made a great point on his last video as well. You have to realize that movie theaters are slowly going to go away, and they're going to become more of a classic, antique kind of, night at a town kind of deal. There's only going to be a few of them, and that would only leave streaming services as the major player of where, studios would, release their movies. And really, that point's already been kind of proven due to this pandemic. So many movies were set to be released during this time and either went straight to Netflix or straight to DVD. Or right now, I wanted to touch on this, that cases are on the rise again, and with that, it brings a lot of fear. And with fear, it means that states, and certain states especially, are starting to tighten up the rope and make things more strict again. I live in Michigan, and our governor, Governor Whitmer, or as the kids like to call her, Big Gretch. Big Gretch just enforced a mandatory mask wearing order that just went in place this week when you're in public spaces, or indoor public spaces for that matter, or else you get fined $500. And I actually seen cops ticket people for not wearing a mask. If cases keep increasing the way they have been for the past week or so, I could definitely see states, and definitely states like mine, the one I live in, going back to a full-on lockdown. And things that would happen during that full-on lockdown is people, being stuck at home. And what happens with people being stuck at home? Well, we've already seen it. Netflix had an increase of 16 million subscriptions in the first lockdown. So do you think I think it's that outrageous for another surge of subscriptions happen like that? No, I don't think it's outrageous. And so getting into the nitty-gritty, if you ask me to pick and choose between movie theaters and streaming services, and then I break that into which streaming service do I pick, I'm gonna have to go with Netflix. So long story long, yes, I think Netflix, in my eyes, is a buy. For me, obviously, because I'm not a licensed financial advisor, so make sure you go talk to one. However, I'm not gonna be buying Netflix when it's at its all-time highs. I'm definitely gonna try to wait so it pulls back a little bit, if it ever does. However, that is going to be it from me, guys. I hope you enjoyed this stock company product analysis over Netflix. Now, usually, guys, I would look into an income statement, and if I really got crazy, I would look at the balance sheet. But I started filming before the quarter earnings actually got released, so I didn't get to look at those, so I actually scrapped that idea because I wanted to film and get this video edited. So until next time, guys, remember to like, comment, and subscribe, and I will see you guys on the next one. Peace. Or Disney Plus and chill, or Showtime and chill, or HBO and chill, or HBO Go and chill, or HBO Plus and chill, or HBO Max and chill, or Peacock and chill. I mean, I literally could go all day with these.